Candles are the language of price. In the next few minutes, you'll learn how to read any candle, spot 3 beginner patterns, and most important, when to trust them. Quick pause. If you want daily, no-nonsense crypto levels and trade-ready setups, hit follow and turn on notifications. Each candle shows 4 things: an open, a close, a high, and a low. The body is the distance from the open to close. That's the body. The wicks are the extremes price reached. Green means the close is above the open. So in this case, the close is here and the open was here. Red means the open. Red means the open is above the close. The close is below the open. In other words, okay, so this was, in this case, this was the open and this was the close. And it's exactly the same on every time frame. For example, this is the 1 month time frame, okay, but this is exactly that. What I just told you stands for the 1 day, the 1 hour, the 4 hour, the 1 week. Same thing. Rule 1, never trade a single candle in isolation. Always add context. Things like trend, support and resistance, and volume. Okay. In this case, the trend has been up. In this, we're looking at Bitcoin US dollar, by the way. Okay. Areas of support and resistance. Here's the support right here at 117 and resistance at 120. And volume. Right here, you can see add this as an indicator. Here's the volume for this candle right here. It's green. Here's the volume for this candle right here. Candles tell you who's winning. Context tells you where it matters. A doji is a tiny body and visible wicks. It signals indecision. Near a strong level, a doji can warn that control may flip if the next candle confirms that. That's important. If price closes strongly through the level in the same direction, the doji. Okay, here's some examples. A bullish doji because it's green, a bearish doji because it's red, long-legged doji with like almost a non-existent body, just like a cross, gravestone doji, same type of thing, and a dragonfly doji. And we do see them. Here's an example of dojis. Mr. Miggles on the monthly. You see quite a bit of dojis, quite a bit of indecision. Here you go. September or October, doji indecision. And then we have to see what happens in the next candle to see what direction it's going to go this one. This time it went up. Same thing right here. April, May, June, July, dojis, all types of dojis. And do you recognize this doji right there? Looks a lot like a gravestone, doesn't it? But in this case, it actually went up the other way. Bullish engulfing is next. A bullish engulfing. These are engulfing patterns. This is the bullish engulfing pattern. A bullish engulfing closes above the prior body after making a lower low. Buyer stepped in at supports. In a bearish engulfing candle, remember you're reading these things from left to right, left to right, left to right. So this is bullish because this green is bigger than this red, right? And this is a bearish engulfing because this red is bigger than this green. Bearish engulfing does the opposite at resistance. And the best spots, you keep support or resistance, key support or resistance after a swing. You look for confirmation, a follow-through candle, and a pickup in volume. Now we're going to take a look at hammers. Inverted hammer. This is a hammer that looks like a hammer, right? Little to no upper shadow. Body looks smallish body. Long lower shadows, long lower wicks. The inverted hammer, same type of thing, but just the wick is above it, as you can see, and little to no lower shadow or wicks. Hammer shows sellers push price down, but buyers rejected it. Ideal at support. An inverted hammer or a shooting star flips that logic at resistance. Again, the key is location and confirmation from the next candle. So let's put it together. Price pulls into a marked support zone. Prints a doji. Right? This is the support zone right here. This line right here. You can see it prints a doji, and then we're looking on the monthly, Mr. Eagles, and then it pulls an engulfing candle. Okay, a very big, strong one in this case, with volume somewhat rising. So this would indicate to me this is looking bullish. Obviously, now we'd look for a continuation to see what happens, to see if it holds this area. But that's other aspects of technical analysis. But now you can see just on just these 2 candles that things might be bullish, right? Take a look at some volume. Volume is not as high as needed, so maybe it's not a strong indication. But that body is looking very strong after seeing all these dojis, all this indecision. So a quick checklist. Okay, setup is the trend plus areas of support and resistance. Is the trend going up? Is it going down? where's the area of support, where's the area of resistance. So the signal would be the doji or the engulfing candle or a hammer there, but we looked at a hammer, and the confirmation is the next candle plus volume. Okay, we want to see some strong volume to show strength. And the risk, put a stop beyond the wick, target the next level. Common mistakes: trading patterns mid-range, ignoring volume, or skipping the stop. If this made candles stick, hit the like and subscribe. We break down price action every day, and our full daily market analysis is second to none. Join the VIP for the deep dives and trade maps. See you in the next one. Have a good one. Peace.